I remember a conversation that has stayed with me for years. A young father, healthy, hardworking, doing everything right. He had just bought a home and was excited about his future. When life insurance came up, he laughed and said, "I'll do it next year. Right now, I have other priorities." A few months later, an unexpected medical emergency changed everything. His family did not just lose a husband and a father, but they also lost the income that paid the mortgage, the groceries, the child care, and the stability of their daily life. What hurt the most was not that he did not care. It was that he thought he had time. Almost everyone thinks they have time. And that belief is what leaves families exposed. This is a story people recognize, even if it did not happen to them directly. We have all seen it through friends, co-workers, relatives, or news headlines. Someone good, someone responsible, someone who planned to get around to it. Term life insurance exists because life does not wait for perfect timing. It protects income, not wealth. It protects families before savings are built, before debts are gone, before children are grown. And the painful truth is that the younger you are when you buy it, the more powerful it becomes. Let us start with age 25. At this stage, most people feel invincible. Health is good. Life is starting. Income is growing. And because of that, protection is extremely affordable. For a $600,000 death benefit, a 10-year term costs about $28 per month, or roughly $317 per year if you pay annually. A 15-year term costs about $34 monthly, or $389 annually. A 20-year term comes in around $36 per month, about $413 per year. Even a full 30-year term costs around $54 monthly, or $617 annually. That is less than many people spend on eating out in a single month. Yet it creates a $600,000 safety net for your family. At 25, time is on your side, and the insurance company rewards you for acting early. Now fast forward to age 35. Life looks very different. There is usually a spouse, children, a mortgage, more responsibility, more people depending on your income. And the cost reflects that increased risk. The same $600,000 coverage now costs about $31 per month for a 10-year term, or $353 annually. A 15-year term rises to about $38 monthly, or $437 per year. A 20-year term jumps to roughly $47 per month, totaling about $539 annually. A 30-year term now costs around $66 per month, or $761 per year. Still affordable, still powerful, but noticeably higher than at 25. The cost of waiting is already showing up. Now look at age 45. This is where reality hits hard. Health risks increase, premiums rise sharply, yet financial obligations are often still massive. Kids may be approaching college. Mortgages may still have decades left. Retirement savings may not be where they should be. And the same $600,000 death benefit now costs about $59 per month for a 10-year term, or $671 annually. A 15-year term jumps to $77 per month, or $875 per year. A 20-year term climbs to $89 monthly, or about $1,013 per year. And a 30-year term skyrockets to roughly $146 per month, to roughly $146 per month. That is nearly 3 times the cost of buying at 25. Same coverage, same benefit, completely different price. This is not punishment, it is math. And it is why delaying protection is one of the most expensive financial mistakes people make. Term life insurance is designed to replace income. If something happens to you, that $600,000 can pay off a mortgage, eliminate debt, fund education, and give your family time to breathe. It is tax-free money paid directly to your beneficiaries. No market risk. No waiting for investments to recover. No selling assets at the worst possible time. Just immediate financial stability during emotional chaos. Now let us talk about something most people never think about until it is too late: disability. People worry about dying, but statistically, you are far more likely to become disabled during your working years than to pass away prematurely. A serious accident, a chronic illness, or a medical condition can stop income overnight while life continues at full speed. Mortgage payments do not pause. Kids still need food and education. Medical bills often increase at the exact moment income disappears. This is where many families unknowingly lose their life insurance, not because they no longer want it, but because they can no longer afford to pay for it. This is why the waiver of term premium for disability rider is so powerful. If you become totally disabled and meet the policy definition, the insurance company steps in and waives your life insurance premiums. Your coverage stays fully active without you paying a dollar. That means even when your paycheck stops, your protection does not. Your family remains financially protected at the very moment you are most vulnerable. Without this rider, disability can quietly destroy protection. Families often cancel life insurance to free up cash, not realizing they are removing the very safety net meant to protect them if the worst happens next. With the waiver rider in place, that painful choice never has to be made. You are not forced to choose between keeping the lights on and keeping your family protected. Think about what that really means. Even if you cannot work, even if life changes permanently, your policy stays intact. The death benefit remains in force. The plan you put in place when you were healthy and earning continues to work exactly as intended. This rider transforms term life insurance from basic protection into resilient protection. It acknowledges that life does not just bring one type of risk, it brings layers of risk, and smart planning accounts for all of them. For many families, this rider is the difference between stability and collapse during a long-term disability. It is not about expecting something bad to happen. It is about refusing to let one unexpected event undo years of responsible planning. This is why professionals strongly recommend the waiver of term premium for disability rider. It protects your protection. The second rider that deserves attention is the children's term insurance rider, and it is often misunderstood. This rider allows you to add life insurance coverage for your children under your policy at a very minimal cost. No parent ever wants to imagine losing a child, but if the unthinkable happens, medical bills and final expenses can create financial strain during an already devastating time. Beyond that immediate protection, this rider carries long-term value. In many cases, it allows your child to convert the coverage into permanent life insurance later in life without medical underwriting. That means you are securing their future insurability today, before health issues can ever interfere. It is a quiet, responsible decision that protects both the present and the future. People search every day for affordable term life insurance, best term life insurance for families, life insurance for young adults, life insurance for parents, income replacement insurance, term life insurance quotes, disability rider life insurance, children rider life insurance, and term life versus permanent life insurance. These searches exist because people know protection matters. They just underestimate how fast time changes the numbers. Term life insurance is not about fear. It is about responsibility. It is about understanding that love without preparation leaves people exposed. The difference between buying at ages 25, 35, or 45 is not just dollars. It is control. It is choice. It is peace of mind. The same $600,000 means drastically different things depending on when you act. If you are young, you are buying certainty at a discount. If you are in your mid-career years, you are buying protection for the people who rely on you daily. If you are later in life, you are buying stability while hoping you had acted sooner. The lesson is simple and urgent. The best time to buy term life insurance was yesterday. The second best time is today. If this message made your heart race even a little, that is not fear. That is awareness. Awareness saves families. Make sure to subscribe to our channel for more real financial education. Click the like button to support content that protects families, and stay with us as we continue breaking down smart decisions that truly matter.